Friday, the 6th of December. I am Bosin Amafaye, and this is your Business Morning, wrapping up a very busy week of key economic briefings for President Buhari's administration, and that ends today with the World Bank Economic Update, teeing off on Monday, and Moody's Investor Services Rating Report on Nigeria that was released on Wednesday. Meantime, in the week, the AFDB presented a snapshot of operations in Nigeria for 2012-2019, outlining investments in key areas and unveiling new country strategy paper for 2020-2024. All of this as the National Assembly wraps up Budget 2020 scrutiny and passed 10.6 trillion naira as a new year appropriations. That document is now awaiting President Buhari's signature, returning Nigeria to January to December budgetary calendar. So let's unveil the AFDB Nigeria's country strategy paper for 2020-2024. But first, we'll review the paper that was presented before stakeholders and what lessons have we learned from these engagements of $5.3 billion between 2013 and 2019 from the African Development Bank. And granting us this exclusive interview live from Abuja studios is AFDB Nigeria's country director, Ebrima Fall. Good morning, Mr. Fall, and welcome to the program.
Good morning, Mr. Bosin. Thank you for having me this morning.
We appreciate your coming here on this exclusive interview. First, let's step back into what you've done in Nigeria so far. But first, when we talk about Nigeria being the largest shareholder in AFDB, what is the size and value of Nigeria's shareholding in the AFDB group?
Nigeria is the largest shareholder with a 9.4% shareholding in the African Development Bank. It is followed by the United States. In most other institutions, the IMF and the World Bank, the US is usually the largest shareholder. But Nigeria, in the case of our bank, is the largest shareholder with 9.4%.
And dollar value?
Well, the dollar value in terms of last year's the last GCI contribution was about $310 million of paid up capital, although there is also the unpaid capital subscription. In terms of the paid up capital, is about $306 million as of December. And when you take that and factor it with the amount of lending that we do in Nigeria, we're able to leverage for each dollar that Nigeria contributes about $17, $18 to that. So it's quite a significant leverage for the contributions that they make.
Great. With that background, now let's talk about the snapshot. Give us a snapshot of your AFDB Nigeria's operation in the country over the last 4-year period, or so 2013 to 2019. That's about a 6-7 year.
Yeah, so from 2012 to 2019, the current country strategy, which ends at the end of this month, we were able to implement or invest in Nigeria directly about $3.2 billion. And then we were able to then leverage other partners to join us in financing investments to the total tune of about $5.3 billion in many sectors of the economy, private sector and public.
Great. So if you look at the total investments, how did it all go? How is it spread between the sovereign and the subnationals and perhaps the private sector?
Yeah, generally we have a ratio of 50% sovereign and 50% private sector. Of course, it's a dynamic ratio in the sense that depending on new approvals and projects that are ending, the ratio might be tilted somewhat toward either public or private, depending on the time of that we're looking at it. But generally, we target a 50-50 balance in terms of our distribution. In terms of the federal and the and the states. These two changes, but generally the federal allocation is slightly higher, definitely, than the states. We're now expanding our subnational strategy, developing capacities of the states to implement projects. That is critically important if we want to scale up in the subnational space.
So you sat down with your team and some government officials, and I think it's very big stakeholders. If you check on Twitter, what your office tweeted this week in terms of country performance review. What's the outcome of this review?
Yeah, so at the end of every 5-year cycle, because the strategy papers are 5-year cycles, so at the end of each cycle, we do 2 reports. The first one is what's called the country portfolio performance review, where we take stock at what projects, what we had planned to do and what projects were implemented, and to then assess how well really we have worked to implement what we say we were going to do. The idea is to make sure that we had value for money, that impact is being felt, etc. So that was one part of the process. The second part of the process was to inform stakeholders what we have been discussing with the government over the past year in terms of what the new strategy going forward from 2020 to 2024 is going to be. So that was the purpose of the consultations and the validation exercise this week.
So let's do sectoral distribution of these 5.3 billion US dollars between 2013 and 2019. What sectors top the list of your performance of AFDB in Nigeria, and why?
The financial sector is the largest, and the financial sector really, we're talking the private sector. As you know, the bank is a wholesale lender. We do not do retail banking. But to be able to lend to the most important segment of the private sector, which is the small and medium scale enterprises, we operate through lending to the commercial banks at the wholesale level. So we provide lines of credit, and this is then on lend to the small, medium scale operators. We also provide lending for real sector activity. So that green portion that you're seeing on the screen of 41% comprises all our private sector lending, but mostly comprising wholesale lending to banks for onward lending to small, medium scale enterprises. Then, of course, you have the energy sector, which is also extremely important, followed by water and sanitation and other segments. Agriculture is about 9%, but we are looking to scale that up in the new CSP to about 20 to 25% of our portfolio.
What informed the sectoral distribution of your operations in terms of dollars infusion into them? Is it based on the requests from government or private sector or subnationals? How do you decide what projects get what?
Well, essentially, the whole process is always demand-driven by the government. Our strategy is based completely on the government's medium-term or long-term strategy and what the government prioritizes. What we do is to accompany the government, to partner with them, to invest in areas that we receive requests from. That's one. The second thing is the level of preparedness of projects. So different sectors are at a different level of preparedness. And what we find is that we could improve the state of readiness of projects in many of the other sectors. Of course, there's also the urgency of infrastructure, which is undeniable. So these are areas that I think the last pillars of the CSP focused on. The first pillar was on social inclusion, and the second pillar on social inclusion and sector policy, and the second pillar was on infrastructure again. And I think the new pillars are also going to emphasize some aspects of that.
Okay, so in part of your contributions to Nigeria, I'm sure folks are interested in power and energy and agriculture. Can you speak to this both at the national level and at the state level? What's been achieved over 2013-2019 period, Mr. Fall?
Yes, in the power sector, we have been working very closely with the government, and of course contributing significantly to the PRSP process through providing guarantees to independent power producers. We just recently, last week, approved a $210 million loan to the TCN for transmission. That was a stage one project. We expect to move on to stage two, which will again cover probably about another 100 million. The idea is to improve the transmission and the evacuation of power, of idle power, for example, estimated to be around 3,000 megawatts that is presently not being evacuated, so that this project will aim to help that. We also have received and are working with the government to see how we can help to improve the discourse. So that's another critical element of the power sector that we're working on. But in the private space, the independent power producers, there's a lot of clean energy projects that the bank is looking to support and to also provide guarantees to investors in that space.
Very interesting, a table, a chart that's on the TV screen now for our viewers to see the map of Nigeria and the footprints of AFDB Nigeria across those 5 pillars at the bottom right of the screen. So if you look at this distribution of these ongoing projects, do you think this is sufficiently covered if you look at what has been achieved between 2013 and 2017, if you're looking at the chart at the upper left of the TV screen there, that graph?
Yes, this shows the bank's footprint in Nigeria, sort of based on the 5 priorities of the bank, essentially power, agriculture, industrialization, improving quality of life, and regional integration. You're absolutely right. The bottom right there clearly is more densely sort of covered, but that's not surprising. I mean, if you look at Lagos as the largest, Lagos State, for example, as the largest economy within Nigeria itself, you will definitely see some bias towards that. But I think more importantly also, there are other factors that makes it difficult sometimes to operate in certain areas of the country. But it doesn't prevent us from doing that, but it just means that the scope and scale of operations tends to be much smaller in some of those areas. We are very conscious of the need to ensure that there's a distribution between the 6 regions is even. So we aim to make sure that there's an even distribution across all the 6 regions of the country.
So you sat down this week with some government officials and all. I'm sure you've continued to have this engagement. What are the lessons learned and what recommendations are on the table from the 2013-2019 CPPR?
Yeah, I think there are lessons for both sides of this partnership. If I start maybe with us, the bank itself, one of the things that we have learned, and I think you will agree, is that we have scaled up our operations significantly since 2016. We have almost doubled the size of the staffing in Nigeria, and that shows that we want to be close to the operations and to understand and to also partner with the government. We also, the second lesson also would be that preparation, in most cases, the money to invest is not the problem, but the preparation of the projects to bring them to bankability is a challenge. So there's a need to make sure that adequate project preparation is being done across the federal government and also across the states. The third area is that the project implementation units tend to lack capacity in implementing projects. which can lead to delays. So what we are doing to mitigate that is with our presence now on the ground, we can meet with the project implementation units very often, more often than we could have if we are not fully equipped on the ground. So that is also helping the process of implementing projects in Nigeria. Other delays, other things that we're discussing with the government are more procedural and process-driven. For example, once projects are approved, they have to go through the FEC and also through the Attorney General, and that sometimes could take some time. So we're looking at ways of how to make that process a little more smoother than it is right now.
Great. So let's talk about the future. The 2020-2024 country strategy paper for Nigeria. What's in this document and what will make it significantly different or be a game changer for the country?
Yeah, this is a very important strategy for us, because I think it is the first strategy since we have scaled up in country. The focus, the two pillars that we have been discussing with government are anchored by the ERGP, and also forward-looking in the sense that we are anticipating some of the things that the 11 points priorities that the government is pushing towards a medium-term strategy going forward. So it's going to be based on two pillars. The first pillar is on infrastructure and sector governance. And the second pillar is social inclusion through agribusiness and human capital development. And these are areas that the government have prioritized, that we have discussed with them, that our interventions will be governed by these two pillars. We expect that over the next 5 years, we would be investing at least about $1 billion a year directly, but leveraging from our partners probably an equal amount at least, to be able to invest in all of the sectors that we hope to be in, that we are in already, but to scale up in many areas. One area that we want to really expand significantly is agriculture. So based on the special agro-processing zone model that we have started developing in other areas, we intend to intensify our engagement both at the federal and the state level to scale up on SAPCs. We expect to continue our investment in the power sector. We expect to invest a lot more in water and sanitation, but of course roads and other infrastructure as well. This time around, though, aside from just the physical infrastructure, we are focusing a lot on the human capital investments, on creating jobs, on health, on nutrition, etc. These are all important aspects of the new strategy.
Well, the government's planning to borrow more. That's the Nigerian sovereign. The authorities, the government is planning to borrow at least about additional $22 billion more, which has been presented to the National Assembly. And some of the, if you look at the breakdown of the project, some of them, these monies will be borrowed from the EFDB. Do they fall under this 2020-2024 program you're talking about, Mr. Fall?
Yes, every borrowing has to fall within the framework that's currently in place. This new strategy we expect will be approved by our board sometime in February, and that is enough time for us to be able to work on the projects that are falling in the first quarter of the year. So yes, they will fall within this strategy.
Okay, Mr. Fall, we will talk a little bit more after the break. We'll need to take a break, but when we come back, we want to ask you a few questions about the broad economic outlook for Nigeria. The World Bank, Moody's have released a number of reports about Nigeria, and the government is planning a new 40-year economic program. So how does the EFDB Nigeria's CSP 2020-2024 fall within what the government is doing at a broader level? That we'll discuss with you when we come back after the break. Ebrima Fall, Country Director, EFDB Nigeria. Stand by, and everyone. Ibrahim Afar, the country director for EFDB Nigeria, live here on Channels Television for this exclusive interview. Thank you so much on wrapping the CSP, the country strategy paper for 2020-2024. Mr. Afar from our Abuja studios, thank you so much. So the question just before the break was, how does your program moving forward fit into Nigeria's broader economic outlook?
Well, I think it is supportive of the government and the private sector. We're a bit more, I think, positive, given what we're seeing. For example, we're seeing a greater momentum in investing in infrastructure, both in the public and the private space. We're seeing more public-private investments that are developing. We just had the Africa Investment Forum in Johannesburg, and the response to Nigeria was significant. And we are looking ourselves at several projects with private sector donors. So we believe that although our Africa economic outlook will not come out until probably towards the end of January, we are seeing we anticipate some incremental growth in the economy going forward. Probably not as large as one would like to see, but definitely we can understand the sentiment that is expressed by Moody's, giving some of the more global risk that Nigeria faces, both in terms of oil prices, for example, and probably interest rates. But I think that from a domestic investment point of view, infrastructure will play a big part. But agriculture, more agro-based processing, I think also will add to the momentum, and manufacturing will add to the momentum to generate some incremental growth going forward.
If you try to weigh your investments in the country in terms of the critical areas that you mentioned in the first part of this interview, which has to do with the Human Development Index and Human Capital Index, both indices, one by the UNDP yes. and the other by the World Bank. Moving forward, how do you think we will rank moving forward? If you look at some of the concerns regarding the fact that Nigeria may hold the largest portion of the world's poor in some decades down the line.
Yeah, I mean, indices hide some very significant facts. Our own strength in terms of partnering with the government in human capital will focus on basically skills, TVET programs, and STEM. We're also focusing on health, and like I said, to try to help also prevent stunting, nutritional aspects of things. Some of our partners, the UN, the World Bank, etc., focus on in other areas, in addition to maybe some of the areas that we're also doing in terms of primary education, early child education, etc. The index takes all of that and more, so it's very difficult to say which way the index will go. But we are seeing that the government itself has prioritized human capital as the main priority of this government going forward. We are seeing larger investment, larger partnerships also, not only with the donor community, with the development partner community, but we are seeing it with private entities like the Bill and Melinda Gates Foundation. So I think the drive towards improving human capital investments and outcomes in the country has picked up significant momentum. And I would expect that the indices that we're talking about will improve going forward.
On a final note, if we go back to portfolio investment, strategic thrust, what will be the change of tack or tactics, if you want to put it that way, moving forward in some of the lessons that you learned from the 2013-2019 program on the side of the government, both at the sovereign and the subnational level?
I think at the sovereign level, power is going to continue to be critical. Water and sanitation projects are going to be critical at the sovereign level. And of course, human capital investments are going to be critical. What we're seeing now in the non-sovereign, we're trying to sort of rebalance our portfolio away from wholesale lending through lines of credits to more real investments. For example, on agro-based processing. So we look at the whole value chain for agriculture and try to promote more value addition in those sectors through manufacturing activities or some other added value-added activities in those sectors. For example, in the last CSP, we are also financing, part of the financing team for the Dangote refinery. We finance also the Indorama fertilizer project in the private sector. We are now looking next year to be part of the team financing the Lagos cable car project, for example, which I believe is a very transformative project. We are looking at financing some economic cities in the Njimba, in Abia, for example. So these are all very, very important and transformative projects that the bank is working on, not only in the public space, but also in the private sector, with a deliberate attempt to move our portfolio from wholesale lending to actual real sector investments.
Ebrima Fa, Country Director for EFDB Nigeria, thank you very much for coming on the show today to speak to us on the 2013-2019 and the outlook for the 2020-2024 country strategy paper for Nigeria. Thank you so much. Enjoy your weekend and see you next time.
Thank you very much. Thank you very much.